Welcome. I'm Gianni Di Poce. I'm going to be with you for the next hour until the bottom of the next hour. I hope you had a great weekend. It is Monday. It's Monday, so we're starting a new week. We're starting a new month, and we're calling this Next Level November, day 3. I don't know if you remember last year. I was actually telling my wife this morning. Like we just finished having coffee, and I was starting to move to my desk, and I prepare my slides to get ready to map out my agenda, what I'm going to talk to you about. And I turned to her, I was like, I remember doing this last year. Remember we had no nonsense November last year, and so I didn't want to repeat it because that's boring. So I said, okay, next level November. Well, next level of what? Well, is it going to be the next level of the bull market? Or is it going to be the next level, meaning that the next level is the bear? So we will see. I did quite a bit of digging this weekend, deep dive, deep analysis. And if you remember on Friday, I left you with the task. I left you with some homework that I wanted you to look at some weekly charts and some monthly charts. So I'm here reporting back to you on Monday. Did you spend some time this weekend looking at any weekly charts, looking at any monthly charts? Let me know in chat. I want to know if you did your homework. If you did, you get a gold star. If not, well, good thing I did it for you. Okay. The good news is that we saw all of the stock indices hit new all-time highs last month. We closed at record all-time highs across all of the indices, whether it's the Dow, the S&P, the NASDAQ, even the Russell 2000 closed at a new all-time high. So that is bullish. That's what you see. There's some issues in the crypto market. It's do or die time. I will drop an article in chat here that I penned recently. Let me see here. We actually have 2 articles I'm going to share with you. Well, here's the one I sent out today. Why it's time to start giving thanks to tech. And where's my other one? I wrote one on crypto, and I will share that here too. Let's see, copy link. There it is, because it's do or die time for crypto. So, let me actually do this. Click that. Let me see. I want you to have this this article. There it is. Because crypto is really at a major inflection point. I think it's going to be really key to help us determine what type of risk appetite this market has going into year end. Now, there are some good seasonal factors in play. November historically is one of the best months for stocks ever. But don't let the strength in stocks fool you. And I don't mean that from a bearish standpoint. Okay? Don't let it fool you into automatically thinking that we have to drop just because we've been up for so long. I'm going to show you some really interesting data on that, going back many, many years, many, many decades, on how strength leads to more strength. This is something that I've been talking about with you for quite some time. I think you've been seeing this play out in real time as well. Of course, it's Monday, Midcap Monday, so we're going to be diving into the midcap space to see what is going on there. By the way, I also want to know, I know many of you have Amazon. Amazon, another gap up. Well, that was exciting, was it not? And guess what? I think Tesla is next. So anyways, I had a pretty good weekend. Friday was Halloween, took the kids trick-or-treating. We went trick-or-treating in the neighborhood that I grew up in, and I got to say, I don't know what it is with the internet. Like, you go online, people are like, oh, there was no one out. It was terrible. I mean, the neighborhood was packed. I haven't seen that many kids out in that neighborhood. It's all a cycle, right? Like, you have families that, they come in, their kids raise, they move out, they downsize, they change their homes. It's a family-friendly neighborhood. There were so many kids. There were so many kids, and it was good to see. The decorations were awesome. Like, some of the decorations, they have like those sounds, very nostalgic. The kids had a blast. They don't even eat the candy. They just play with it. They think it's a toy. They're not really into sweets. Kind of take out after me in that regard. But my wife did she made some homemade pumpkin pie with pumpkins that I grew in the garden. And that was very, very, very excellent as well. So Halloween trick-or-treating was a great success. Great time. I did bust out the Captain Hook costume as I promised the kids. And then Sunday we spent some time with some family friends, got all together about an hour away from here. So that was good. And then I actually got my you guys remember my chimney, I was telling you guys I smelled that gas. I was right. And it wasn't the actual fireplace. It was the gas line. I had one of those like Dante keys where you have to like turn it on and turn it off. That was leaking. And guess what? Grok is what told me, because I was talking to Grok. I said, no, you have a leak. Get it fixed immediately. So I have a good friend of mine who's a plumber. Came over today, took a look. Easy fix. No holes in the walls. No needing to, gut anything, rip any lines out. Easy fix. That's all done. Very happy. A lot less than what the chimney company quoted me to do. And they completely misdiagnosed the problem. So yeah, I'm really glad that that's taken care of, because the way my living room is set up is the fireplace is like the center of the living room. It's not the TV. I'm not a big TV guy. I mean, yeah, wife and I will watch a movie over the weekend, weekend night, but on a nightly basis, it's more the fireplace that is what draws us together. So I was happy about that. So I appreciate you guys all tuning in today. I have a lot of material I want to cover, a lot of charts that I want to surf with you. I want to spend some time talking about the dollar again, but before I do that, let me see who's all joining today. Who do we have? We have John, Stephanie, SHP, Tony D, Chicago Dave, Tim, Ed Mines, Nora, Jackie J, Roger Bro, P Butts, Randy. Good. I'm glad to see that many of you spent some time looking at the charts. Steve said his weekend was spent recovering from the Halloween candy overload. I did have some Twizzlers. And there were actually some of the people in the neighborhood that were passing out like high noons and like White Claws. So I did actually have a couple drinks while I was walking with the kids, because they were being passed out like candy. I wasn't drinking when I was walking them around, because I brought them back to the house. But then I passed out some candy there as well. So it's all good. It was a lot of fun. Rio did his homework. Good. Secret Agent Charlie's blood tap is Kit Kat Plus. Okay. JT, good morning. Shane says there's a good point that seasonal factors didn't mean anything for August, September, and October. That is a good point. And I'm going to show you what happens when stocks do well during those seasonally weak periods, how they tend to finish the year. I'm really glad you brought that up, Shane, because that's a big point of what I want to hammer home today. So glad you're paying attention. 1800 Snafu says it's diet time back to 40K, then massive run up over time. I'm not going to rule out that possibility entirely. All I do know is we are holding on for dear life right now. I think the dollar has a lot to do with this near term, and so we'll keep an eye on them. NJC Sunset, no, they were not busting. I know the kids in the neighborhood that I grew up in. I don't know them personally, but I can tell like when they're from the neighborhood. Yeah, Peter, you're right. The diagnosis is based on how much money they can make, not the actual need. Well, that was what I was worried about, having to call a plumber. So again, I got a good friend of mine that does his own plumbing stuff, and easily accessible, quick response times. That's I always say you need a plumber, you need an electrician, and what's the third one? Just like a maintenance guy of some form. And thankfully, we got all three, and they're people I've known for a long time. So very, very important stuff. Carlos, Les, Massimo, Calvin, Jan, Steve V. Last looked at charts. Good. Kids love White Claws. Not mine. They don't even eat the candy. Halva, HVAC, that's what it was. Yeah, I do have an HVAC guy too. Lawyer. Oh, geez. What we say about lawyers, right? No, I'm just kidding. Doctors that way too. I finally did find a doctor that I like, which is good, because for a few years though, I didn't really have one. Do I have a graph correlating the number of trick-or-treaters versus stock performance for November? I do not. But this is probably the most I've seen in years. I mean, more than last year. This year's Halloween was kind of warm. Last year's Halloween was nice too, but this time, like, the kids, they walked like the whole neighborhood. They were real troopers. It was really, really nice. Anyways, enough of that. Let's get into the charts here. start off by looking at the dollar. One of the things that I came across in my deep dive this weekend. So it wasn't just stocks that I looked at on the weekly and the monthly charts. I look at currencies, I look at commodities, I look at bonds, I look at metals, I look at crypto, I look at everything. Everything under the investing sun is fair game. And so the dollar capped off a really good month, out at the highs against the Japanese yen on the weekly and the monthly basis. But I got those cycles that I like to work with. And I'm watching the dollar here because we actually have a setup here for a pullback. To be even more specific, I think the yen is coming up to a point where we could see a rebound. And what's been interesting, and I talked about this with Blake too, and actually I want to get his monkey bar numbers for crypto and all the other ones too. But we've seen Bitcoin kind of struggle over the last couple of months as the dollar has gotten stronger. And normally when the yen is weakening, that's good for risk assets. But this is why I say, don't rely on correlations on their own to take positions in a market. It's not just like, oh, the dollar's down, I'm going to buy gold and everything's awesome. I mean, how much did we see gold rally this year during periods of dollar strength as well? I mean, yes, the dollar lost a lot against the euro, but the dollar's been doing pretty well over the last couple of months, and gold continued to make a new all-time high. It's been pulling back, but I think you get what I'm trying to say here is that we're not trading correlations. We're trading individual prices, individual markets. And yes, they're all connected. They're all related to one another, but that's not what we're trading. We are trading price. We're not trading RSI. We're not trading momentum divergences. We're not trading volume. We are trading price. So we need to study price above all else. We need to rank price as the number one indicator to make decisions. Price actions, not momentum divergences, not volume, not correlations to other markets, not tweets, not China trade headlines, not Fed Chair Powell firing rumors. I'm just listing things off, right? Price is what guides our actions. So anyways, I'm looking for a setup here where the dollar could be about to pull back against the Japanese yen. You're seeing the dollar against the euro. A little bit of a divergence signal here. It's very, very, very subtle. But if we get a situation where the dollar, I mean, could we be bottoming here in the euro? I mean, I think that would bode well for risk assets. I don't think this dollar sell-off has a lot of gas left in the tank, meaning that if we see the euro pop, to the 120 area, 125, I think that's going to be it. And speaking of which, you're actually starting to see this candle turn greens from red to green here. But I'm looking at the dollar as kind of a proxy for the global financial risk. I have a really tough time being in the camp of, hey, the next crisis is imminent and we're going to have the next big economic crash. If the dollar is dropping, you usually don't see that. As many of the issues that we have here in the US, everything else around the world is worse. No other economy, no other market can absorb as much money as the US can, not just at the level of stocks, but more importantly, at the level of bonds. And that has a bigger impact on the value of currencies than anything else. So again, I think if we do get a final rally in the euro, a final drop in the dollar, that's probably it. And the timing is kind of lining up for that now. So I'd be looking for the euro to maybe make a comeback here. Looking for the yen to make a little bit of a comeback. But here too, it's kind of like do or die in that respect. So really interesting things happening in the currency space, whether it's cryptos, whether it's fiat currencies. I'm looking for the euro yen to be topping out a little bit here. So it's kind of crazy because I'm looking at a situation where the yen could strengthen against both the euro and the dollar, but then the euro strengthens against the dollar. So I actually have the yen as kind of being like the strong one lately, which, by the way, I don't know if you guys have seen what's been going on in the Japanese Nikkei, but it's been going absolutely parabolic. But yeah, 1800 snafu, I'm kind of with you. If we do get to 120 in the euro, I think 120, I mean, in theory, you could go up as high as 125. I don't think that's going to happen. Basically, this high from 2021, I think that could be the last kind of test that we have And I think that would be good for stocks and risk assets and whatnot. So we'll have to see if that plays out. But that is the big find of my weekend. Bonds are still selling off. I am looking for a low to be complete here in bonds. We are due for a bottom. Note how the 10-year note, the 10-year treasury did not take out last week's low today, but the 30-year bond did. In fact, I think that we are now bottoming out in bonds and we'll see another climb back higher. We saw this play out over the last two rate cuts. It's always been a buy the rumor, sell the news. We had that back at the September rate cut. We had that, about a week before the latest rate cut. And now I think we're bottoming. This would be a higher low with respect to the trend. Okay, this low, if we bottom right here, if we're bottoming right now, this would be higher than the last previous important low. That is bullish. That would reinforce the trend in favor of the bulls, especially coming off that high from a couple weeks back. Okay, and so for bottoming here in bonds, I'm looking for it to continue higher. So the setup is there. And why this ties into currencies is because the relationship that has been by and large holding true over the last several months, over the last year or so, is that when bonds rally, when treasuries rally, the dollar sells off. So do you see the picture I'm trying to paint here for you at a macroeconomic level? And this all ties into, is the US going to outperform? Is crypto going to come back? Are metals going to come back? I think they will. But if I'm looking for a situation of bonds bottoming out and the correlation has been, that doesn't mean I'm betting the house on this, right? That the dollar will sell off when bonds rally, then that's shaping up good. I like what I'm seeing. Okay. So I'll be keeping a close watch on that. The 2-year didn't make a new low. The 5-year, same thing. So only the 30-year bond made a new low. So we do have a nice setup for a bottom here. We just need to close up off the lows of the day. That would be a very, very good development. So now how does this tie into crude oil? Well, crude oil was rallying last time I checked. It still is up on the day ever so slightly. Let's go ahead and take a look at the intraday action. I'm still not a fan of crude oil right now. I think that has a lot of upside headwinds. That being said, over the weekend, we usually don't look at grains, but I'm pulling up grains. I think grains have bottomed. I think grain prices have bottomed. Look at beans. Okay, China had that big purchase of beans. This looks like a bottoming formation. Like I said, we looked at monthly charts. I think wheat bottomed. I think corn bottomed. Don't be surprised if I start throwing some commodity trades at you sooner than later. You want to know what market I made the most amount of money in back in 2020 and 2021? It was corn. It was corn. It was corn. And SRC, I'm so glad you said that, because usually when you see grains bottom out, cattle tops. Cattle tops. And we do have, so you're looking at live cattle here. You have feeder cattle. Okay. This could be a top, especially if grains bottom. And the reason why, there's a couple of reasons. First of all, they cut down the herd prices, or the herd numbers, right? So beef supply is pretty low. The herd numbers are lowest, I think, since 1950. But they have to feed these animals too, right? So when the feed costs are high, they don't want to be, paying as much to feed them. Okay? So that's what happens. You often see this play out. So when feed costs bottom, the meat prices top out. Now, unfortunately, I don't think we're going to see those prices passed down to the consumer. It just means that, hey, beef prices might stop going up for a period of time. Okay? Which would be good, because they've been going up now for 5 years. For 5 years, since April 2020 to October 2025. 4.5 years to be precise. So we have the setup. I'm here with good news on the meat front. But on the grain front, that's an issue. And then at some point, that's going to cause, some additional problems in cattle. Then you'll have oversupply, and then the farmers are going to struggle more. It's all a cycle. It's all a big process. I mean, you think about the amount of knowledge that a farmer has to have in 2025. This isn't just like, oh, walked outside and dropped a couple kernels of corn in the ground and I had a corn crop. No, I mean like hedging, fertilizer, watering, all this kind of stuff, weather disasters. I mean, really, we take this for granted. Like we live in this agricultural civilization that's built. We have everything that we have. We do everything that we do. Let me tell you something, guys. If I had to worry about if I'm going to have food for next week or for the winter, I wouldn't be sharing these charts with you. I'd be worrying about where my next meal is going to be or my meal for the next month, right? Everything that we do is because we're able to feed people. We don't have to think about food. Like we're able to engage in other productive behaviors aside from just, trying to feed ourselves and to feed the population. We have excess, we have surplus. It's really a blessing in many ways. And nature doesn't waste either. Everything can just get composted back into the earth. So only civilized humans waste, right? I feel like how I smack my chin. We're so civilized. Yeah, yeah. Anyways, so that was part of my weekend discovery. Don't have the confirmation of a bottom here yet in corn, but we did go to the January contract for beans, and this looks like a bottom. This looks like a bottom. So it's very, very exciting developments. And you do have little micro contracts in these as well, just so you know. So be on the lookout. It's like XK, XC. That's nice. You can trade corn for like 230 some dollars per contract. What are the main ones at? Let's see. Corn dropped down to $1,000. Wow. I think they had raised the margin to like three to 5 grand back when corn had boomed a couple years ago. So yeah, it was like up to like 3 to 5 grand. And this actually topped out, by the way, during the Russia-Ukraine conflict. Pretty amazing how that worked out. So anyways, that's what I'm looking at in the commodity and / inflation space. Stocks, this is actually the start of the week that I wanted to see. I wanted to see some choppy action. I wanted to see things whip around some. Actually, let's see, we're 2 days from the high. I would love if we took out like Friday's low tomorrow. That could be a bottom. You are seeing the NASDAQ outperform to the upside. This is a good sign. You're seeing chips up. Good start to the week. Again, this market looks bullish. Amazon up another 4% today. So I know many of you have Amazon. That looks good. I'm happy to see that. Nvidia still hanging out near the highs. Looks like it's still got some legs up to 230. Could Nvidia's earnings 2 weeks from now be a buy the rumor, sell the news event? That's kind of in the camp that I'm in right now. This stock is what has defined this bull market. It's really amazing. We still have that long position in AMD. We have earnings coming up on AMD tomorrow. So this is going to be a big bellwether for the semiconductor sector overall. And then you have names like Micron, which continue to climb. We have that target of 250. We want to sell the rest of Micron if and when it hits 250. That's going to be a good enough for me on that. And another thing that I looked at over this weekend is actually semiconductors kind of pausing. I think that it would be very healthy, very good to see semiconductors pause and go sideways for a while. I still like tech. I still think that can be a big story. But semiconductors, very, very important to see them kind of just digest their gains. I mean, we're talking about a market that's up over 100% over the last 6 or 7 months. That's a huge move, guys. It's a big move. And this is at the sector level. I mean, you look at AMD. AMD's up what? Over 200%, almost 300% over the last 6 months. Okay. So stocks need rest as well. When you see a stock run up too much, it gets exhausted and it can't hold itself up. I mean, imagine if you ran a whole marathon, okay, in a few hours. That's not possible, but let's say if you did, okay, if you did, you're probably going to have a tough time walking, standing, holding yourself up. It's literally no different when these stocks, when you see them rally too much, too fast, right? So I'm watching this. I do really like what I'm seeing here in Tesla. Tesla, we did hit a new high for the year, finally. This is very encouraging price action. You're just chopping around a little bit right here. But this is exactly what we want to see. That looks good. I gotta put my alerts back on. But just taking a look at the the indices here at the short term level, I want to see chop. I want to see us go sideways to start this week. This is exactly what stocks need right now if we are going to see this strong run going into end of year. Okay. So you need digestion, you need breaks, you need to catch your breath. Okay. I know the machines run the market, right? But it's like a treadmill. The machines are like the treadmill, the algos are like the treadmill, but someone's still got to be running it, right? So that's what I'm looking at right now at the index level. Let's take a look at some of the other big tech names. Apple hit a new all-time high last week, coming back down. No real worries there. You take a look at Google. Google is a couple of days off of its all-time high. Nothing that really looks concerning there. So, everywhere I look across the Mag 7, Microsoft looks a little tired here, but again, same story. The theme is, oh, we'd love to see these stocks go sideways, catch their breath, regain their composure before the next leg higher. And we kind of did some myth busting on the Hindenburg omen last week. Everyone's like, oh, the Hindenburg omen, you got to be scared. You got to be fearful. It's Halloween. It's spooky. Well, now it's time. It's time for Thanksgiving. We can be a little more thankful now for the Magnificent Seven, which have carried this market higher. So one of the things I commented on last week, and I confirmed it over the weekend with my reviews, was how the stocks that are lagging, the lack of breadth that you keep hearing about, the lack of stocks participating to the upside you keep hearing about, is coming from the defensive sectors of the market, consumer staples, certain stocks in healthcare, which I still think is coming back, certain stocks in real estate, certain stocks in utilities. Utilities have done well because of the nuclear name, but there's a lot of defensive stocks that have been breaking down. Well, what does it mean when the growth stocks are breaking out and the defensive stocks are breaking down? That's not rotation into defensive areas of the market. That is an acceleration into growth areas of the market. We are selling weakness to buy strength. Professor likes to call that window dressing. Okay. So chop, sideways market, consolidation, congestion, however you want to call it, a boring tape, that's fine. That's what you want after a run like we just had. So we do have Matt that just popped in here. Matt, how you doing today?
Hey, I'm doing great, Gianni. I was just kind of lurking there, watching you go through the charts there for a few minutes. Saw you mention Tesla making a move and Amazon too.
Yes, yes. Do you still have those calls on Amazon, or did you close those out?
I closed them out this morning. Yeah, the remainder I had on those 500%. So, I mean, not a bad way to start a Monday morning, you know?
No, and that's from when we talked about buying that like a couple weeks ago, right?
Mm-hmm. Yeah,
Wow.
yeah, I loaded up on some calls. I mean, it was obviously loading up calls before an earnings announcement usually doesn't work, but it was just got a little lucky there, but basically it just goes back to what I was talking about, how the it hasn't really got a bid yet. It hasn't really been, hasn't seen any really hype from the fact that it's so involved with AI. 30% of the data centers are controlled by Amazon. I mean, you
Yeah.
know, just sort of not doing an in-depth analysis on valuation or anything like that, but just like looking at the stock year to date, it was only up like 1% before
And it's
earnings.
crazy. It's
So
crazy.
yeah, that was just kind of my rationale for that, but didn't bet the
Well,
farm.
we had talked
I
about the
didn't.
like we need to see the rotation, right? So like the leaders in the Mag 7 earlier this year, they were names like Meta, they were names like Microsoft. Um, and they paused, right? They paused, they caught their breath. Meanwhile, Apple didn't make a new all-time high for most this year. It finally did. You had Amazon that hadn't, and Tesla is kind of the only one that hasn't made a new all-time high this year either. So rotation is what keeps these markets alive and well. And so seeing this breakout, seeing this money cycle into Amazon tells me that there's still buyers. There still are people that believe in this rally. Now, whether or not they'll be, proven right in the long run, we will see. But where I come from, Matt, breakouts to new all-time highs are bullish. To me, this looks like a bull flag, so you got this flagpole here. I'd be looking for Amazon. I'm actually really happy to hear that you closed out those calls today because, after
Yeah.
two big gaps higher like this, like what more could you want? That's like, gaps are like the dream of an options trader, in one direction or the other. And so what I'd be looking for here is just a little bit of sideways action again, and build out this flag and then eventually continue higher. We do have the shares of Amazon target of 310, but when you trade options, it's a little bit different because you have to factor in for time in conjunction with price. So I think you really
Yeah.
nailed your time value of your premium there too. So that's a great trade.
Yeah, yeah, I'm real excited about it and kind of padded my account. So yeah, and thinking about Tesla too,
Yeah,
it's probably been a tricky stock to trade for me, to be honest, over the years. So I usually don't trade it, but going into that, going into that event, I believe it's in 3 days, right? The 6th.
I
And
think
so
so. Yeah.
yeah, so there's nice forward-looking catalyst there for the stock to maybe print a couple nice green candlesticks between now and the 6th. So who knows what'll happen after the event. Usually Elon promises a lot and then kind of under-delivers on the day of the event, but definitely could see a nice extension here into the 6th on that one too, in my opinion.
I mean, I'm so bullish on Tesla going into 2026, Matt. It's I think it's going to be the stock of the Mag
Yeah.
7 over the next 3 to 6 months. The way this
Okay.
chart's set up, the trend is up again. We were talking about the rotations needed within the Mag 7, so this checks off a lot of boxes. So I really like this. Yeah,
Yeah, yeah. Yeah, I mean it does. I mean that when you zoom, what was that, a weekly chart you just pulled up?
yeah. I had a weekly. Yeah,
That looks really good, man. Yeah, that looks outstanding. And Tesla is one of those stocks too. I've noticed over the years, watch it trade, and it's one of those stocks where once it gets overbought, it keeps going. Like
yeah, no,
when you think it's overbought, like it's probably going to keep going for another six
yeah,
weeks.
yeah. Yeah, it
So,
just it does attract those types of trades, those types of traders. Really, it's
mhm.
it's a great momentum stock. And you have to know the cycles, you have to know the seasonality, you have to know the setup. You got to be patient, and we have been, and we've been adding to it. It's my biggest position, like everywhere, is Tesla. So uh,
Nice.
yeah, yeah, it's
Okay.
doing really nicely.
Yeah, so all right, Johnny. Well, hey, I just wanted to hop on, man. Didn't really have a lot of an agenda. Just wanted to hop on and kind of talk about those trades with you and kind of high five with you. So I know you're up there in Michigan and I'm all the way down here in Florida, but yeah, great entries on those trades on Amazon and Tesla. And I know you've got several others in the Trinity Trades portfolio right now, and I know you've got a fair amount of dry powder too, last I
Yeah,
checked. So ready to deploy that when you find a new opportunity. So but anyways, I just want to pop on here, guys. I know Gianni's got some things we've got some things working behind the scenes to as a new wrinkle and to add a lot of value to Trinity Trades. So just gonna kind of keep that behind the curtain for now, guys. Not that I came on here to tease you, but I really just came on here to talk shop a little bit with Gianni here in the market and kind of high five. But yeah, I'll let you get back to it, Gianni, and thanks for having me on.
cool. Thanks, Matt. Appreciate you
All right.
checking in.
See you.
All right, guys. So yeah, that's what's going on at the big tech level. Let's go ahead and jump over to China, see what's going on there. China is up a little bit. I'm still keeping close tabs on this. KWeb is down some. CQQQ is down a little bit as well. But I still like the China trade. Alibaba trying to, digest some of its recent gains. Baidu still watching names like JD, but that one's still got some work to do. So definitely some emerging strength coming from China. But what I'd like to do now is just kind of show you some of the data on um, how stocks tend to behave after the impressive run that we've had, similar, in previous instances. So we're looking at how strength in the S&P 500 can make it stronger. So this is how the S&P 500 tends to perform after being up 6 months in a row. So this takes away all seasonality. We're not looking at seasonality here. We're just looking at, okay, the S&P 500 is up 6 months in a row. what are its forward returns 1 year later and across different time periods. So we're going back to 1957. Okay, so we have about 70 years of market data, not quite, but almost. And 1 month later, we are up 2 out of 3 times. Okay, last time we were up 6 times in a row wasn't 6 months in a row, was in July of 2021. And July of 2021, you were about 6 months away from the next bear market, right? Because 2022 was a bear market. 2 months later, you're up over 60% of the time. 3 months later, you're up over 80% of the time. So that would take us into January. Okay. But not by much, not by much. You really start to see the gains add up. Basically, six to 12 months later, you're up 70 to 95% of the time. Not quite double digits a year later, but it's pretty darn close. So again, this has nothing to do with seasonality. Just, hey, the S&P rallied 6 months in a row. How does it tend to behave? Okay, now we're going to zoom out even more on the year. The S&P 500 is up double digits again this year. We're up around 16% as of the end of October. And if we can manage to hang on and finish in the double digit category, let's say up 10%, okay, you can go back here and see how well stocks tend to behave or tend to perform in the following years. Okay, so digging back to 1930 in search of a good sample size, there have been 9 previous cases of 3 consecutive double-digit years occurring within 5 different groupings as highlighted on the table here. So you had it in the 40s, you had it going into the 50s, you had it in the 90s, you had it in the early 2010s, and then you had it in the late 2010s, and you are in a period right now. Okay, so overall, 69% of the years since 1930 have been positive for an average gain of 8%. These 9, the fourth year cases coming in at around 4 to 5% for an average gain of around 4.5%, which are statistically lower than that 8% annual return. Now, if we are seeing a repeat of the dot-com era, maybe we get a 5th year. You had 5 double-digit years in a row in the 90s. That was a real bubble. Okay. The bears might point out that a double-digit 2025 would actually be an unprecedented 6th double-digit year in the last 7. And, maybe we're getting people a little unrealistic about expectations because really you just had that interruption in 2022. But, 2019, 2020, 21, 6 up years in the last 7, that's pretty remarkable. So you don't really have, I'm just looking here. I mean, you did have a period, you had how many, from 82 to 90, you had 8 up years in a row, 1, 2, 3, 4, 5, yeah, 8 up years in a row. But then you had that 1 year in 84 that was only up 1.4%, and then 87 you were only up 2%. So pretty interesting when you think about that. Again, this has nothing to do with seasonality, but this does say, hey, maybe we need to dial back our expectations a little bit in 2026. I think that the first half of 2026 can be very strong, and then I think you'll see a serious pullback. And then where we finish the year, do we still finish up double digits, or do we, squeeze out like a 7-8% year in 2026, right? So again, we call this the sequence of returns. If you get into the market at the top, or if you retire at a market top, right, and the market drops 30%, and you start pulling money out of your account to live off of, well, that money's not going to last as long versus if you retire at the market bottom and you're pulling out money from your portfolio and the market keeps rallying. Okay. This is showing how the S&P performs when the period between May and December, or excuse me, the period between May and October, how you tend to finish going into the end of the year. Okay. So strength during seasonally weak periods has been followed by more gains during seasonally favorable periods. Pretty amazing. Pretty amazing. So you actually finished up every time where you were up more than 10% between May and October. And of course, guys, what is driving all of this? It's all CapEx, AI CapEx. Okay. People say, oh, we're in a recession if it wasn't for AI CapEx. Okay. What? Like that doesn't count? It absolutely counts. This is private sector investment, guys. Like, you say you can never win. Oh, the government keeps the economy afloat. Oh, big tech keeps the economy afloat. I mean, it's still floating. They're spending hundreds of billions of dollars to keep this machine going. You had it again today with Amazon, OpenAI, Amazon. How many times have you heard in the last year that the AI bubble has popped and it's all over? It's not yet. It will end at some point. And if you look at past market melt-ups over the last 10 years, the NASDAQ 100 is up over 500%. You compare that to the Dow in the 20s, you actually beat that a little bit. Japan in the 80s, you're kind of in that ballpark. NASDAQ in the 90s. Are we going to try and beat that record? In fact, you look at each of these instances, and each one is greater than the previous one. Could we actually go up? Could we beat the NASDAQ in the 90s? I mean, this one lasted a year. I don't know why they decided to pick 2015. I think that's kind of arbitrary, especially because you've had multiple bear markets in between that. I mean, in the 90s, you had, technical bear markets as well. So just things to think about, things to consider. Okay. So that's what I had on the schedule, on the agenda for you today. Let me check the portfolio real quick. We're just spinning our wheels. Stocks are holding their ground, just kind of chopping around. All right, let's take a look at what's going on in crypto. If you check the article, read the article that I dropped in the chat. It's very important. I have this exact chart in that article. I just articulated it a little bit differently in there. We did just roll to the November contract. So we're going to look at the November contract here in Bitcoin. Okay, we did not take out this low from the 17th of October in Bitcoin. Okay, in the Bitcoin November contract. But you go to the Ethereum November contract, you did. You did. This is very important. Very, very important. Very noteworthy. Important to watch because we are holding on to support for dear life. Okay. I think in that article I said like 103 to 107 is that level I'm watching. We break below there, it's over, guys. It's over. That's just the way it is. That's just the way it is. But right now, this is what I say, like we let price guide our actions. I got whipsawed out of a couple positions. I was able to take a couple good small entries on these. But we did put on that swing long and micro strategy on Friday. That's actually holding up all right. It's actually holding up all right, all factors considered. But let me be very clear, guys. Bitcoin loses 103, 107. We're going to be dropping to 90,000, like at least. And then what's even crazier, as I wrote in the article, like I'd probably be buying it there. Okay, so you got the 4-hourly chart here. You do got a little bit of divergence. Let's go to the November contract just to be sure. Oh, BTCX25. Okay, you do have some of that divergence. Let's see where we go. Steve asking, is there a short then in Bitcoin? They do have I think they have those inverse BTC ETFs. Yeah, they do. The T-Rex one. ROBN, I think is what it is. ROBN, you can short it like that. Oh, no, that's not it. What is it? BTCZ? There we go. Yeah. I mean, you can trade the futures. It's just, it's not really the most efficient way to do it. But this could be the one that we look at. So I'm not opposed to it. I'm not opposed to that. I mean, it's just we haven't flipped the trend yet. Again, guys, Ethereum has been correcting now. It hit its all-time high on August 22nd. We're almost 3 months into a correction. Crypto is not in a bubble. Crypto's not in a bubble. You can call AI a bubble. Crypto is not. Now, it could just be starting a mechanical bear market. There's nothing wrong with that. And then Seth is short ETHA, Mari. That's good to know. Yeah. We might be looking at some opportunities here. I mean, you start to basically take out 10, 11 bucks on this. I mean, how high could this go? We will see. We will see. But what I do know is that we are holding on. I mean, technically, we just bounced back above support, 107, 103. So let's see if maybe we get some capitulation again. I think that if the dollar is topping out here, okay, the euro's bottoming out, dollar topping out against the euro, dollar topping out against the yen, that might be a bit of a life raft to crypto here. Okay. So that's what I'm looking at there. Let's go ahead and jump over to precious metals, gold and silver. Going sideways here, I'd like to see a little bit more downside. I'm actually looking for a bottom as soon as this month, maybe even the December. I like to see it this month. It looks like you got a lower high here. I like to see this kind of dropping like the $42, $44 area for silver. That's probably going to be good enough for me. Again, after what we saw on the weekly and the monthly candlesticks, this would be healthy. This would be normal. Shake out some of the excess longs. There's already a bunch of people chasing shorts on silver. Why would I not short silver? Because the trend is up. The trend is up. I don't want to short this uptrend. I'd rather wait and look to buy the dip on this uptrend than trying to short the uptrend. Okay, let's take a look at the mining stocks. Yeah, gold stocks are down, silver stocks down more. It's a risk off day for precious metals. Yeah, and you have silver down more than gold. So I would stay away from that right now. There will come a time where we start buying these again, but I don't think that we are quite there just yet. Okay, well, that's what I had for the review. We're going to go ahead and start with Midcap Monday. Let me just check in on the indices. Again here, NASDAQ up off of lows of the day. Again, this is normal. This is healthy. I want to see this. And, yeah, we can even test Thursday's low tomorrow. That would kind of be nice, I think. Oh, let's check in on biotech because we've been bullish on biotech. Last time I saw it was getting sold hard. That's fine. It's kind of like it went out at the highs of the weeks of the month. That looks good. A little bit of backfilling. But I do like the story. I think it's the next phase in the AI landscape. Okay. So that looks good. Let me go ahead and fire up the scanner here for the mid-cap sector. Okay. All right. What do we got here? TeraWolf. What's interesting about like what's going on in crypto is like a lot of these crypto stocks are actually holding up well. Like HUT, continues to do well. You have earnings on HUT tomorrow, but this just looks like a stock that wants more. It's pretty crazy to see. And I don't think this is over yet, but it just completely shrugged off everything we've seen in the crypto and the price of Bitcoin and Ethereum. How's Quantum doing today? I haven't even looked at Quantum. Yeah, they're down. I'd like to, again, I was bullish on Quantum all year. You guys heard me say it, pounded the table, a lot of good trades on it. I'd like to actually just see this chop around more, even correct some more. I think you'll make more money focusing on long opportunities in this market versus like shorting Quantum names. But I want to see this chop around more. This is what I want to see. This is what I want to see. Yeah, Quantum's nothing right now. It will come back. We've seen this. Usually Quantum will go through like 3 to 4 months of sideways action before coming back to life. And so if we topped out in in October, I mean, we're not looking at quantum again until probably February. Maybe January, but no, that's it for now. And that's okay, because guess what? You have high quality growth names like Tesla that are breaking out, like Amazon. Actually have a $1 million challenge name in Cloudflare that broke out. By the way, Cloudflare is also involved in the stablecoin, you know, I guess ecosystem. This stock looks excellent. Um, so yeah, Tim, thanks for reminding me because we didn't even look at small caps. I really liked what I saw in small caps. And I think small caps could be bottoming here already, actually. Perhaps for the week. Small caps are not overbought. Small caps are not in a bubble. You want to look for opportunity in the US. I mean, look at this monthly chart here, guys. We're talking about an index that is just now coming back to life. Now, mind you, I'm not here to say that everything this administration says is right or wrong or correct or incorrect. But one of the things that caught my attention was last week Scott Besson said, "Oh, next year is going to be a good year for Main Street and Wall Street." And I told you why I agree with him. Because I think rates are coming down. And it's going to help Main Street. Okay. The problem is, guys, that Americans have a lot of debt. And it's a lot of stupid debt. It's not good debt. There is such thing as good debt. But most people carry bad debt. Bad debt meaning they're borrowing for consuming things they can't afford. Okay. Versus borrowing debt, going into business, generating cash flow. It's totally different. Let's not compare the two. Okay. That's what companies do on a regular basis. But I do think that lower rates would help the consumer. So we'll see what happens, and it's going to help a lot of small cap Russell. J4, you're looking at Netflix here. Yeah, and you know what, Tim? I want to help Main Street make the prices go down. Very stagflation environment out there. Yeah. Yeah, Netflix has had some issues. I wonder if that split's actually going to help them. Yeah, I haven't touched this one. So yeah, the euro's definitely gonna go lower in time. 1800 snafu. I'm with you. I'm with you. Zelensky states he needs 750 million for energy. Yeah, I wonder if like this whole situation is like, okay, we're gonna help that a little bit more, and then I don't know if it's gonna continue, guys. I don't know if it's gonna continue. It's a really, really interesting situation. So, all right, let's get back on this screen here. How's that trade moving? Indivior. Oh, look at that. Who here has INDV? Indivior getting close to our target of 32. Wow. Well, you should be able to book that gain today. Hopefully we'll get to 32. That looks strong. There was another stock that I was about to look at and I got distracted. Okay, well, I guess I'll find it later. Diginex, DGNX. I did have an alert on this one. This is I think it's a British software company. This actually looks pretty darn good. Got that alert there. Keep an eye on that. GSAT. GSAT's climbing again. Going into earnings. That looks decent, actually. I actually got whipsawed out of that last week. That's annoying. Because I had that stock. Dang. Solar stocks. I'm starting to watch these too. Starting to come back. TAN, the ETF. Then you got, see the problem. Enphase looks terrible. Sedge looks a little bit better. Sunrun, that looks a little better. The NXT's been the best there. That's really been holding everything up. How's new? New, yeah, that one keeps trying to break out. Let's see. Where was my alert? Oh, this is from last week. Let's see. Where? There it is. 1630. So this one's close to trigger. Close to triggering. BBNX had that Beta Bionics. Did I sure? No, but this does look pretty darn good. $26.79. Oh, that's in that breakout there. This actually looks pretty darn good. Dang, it's a little bit far away from the might have a trade here. Let me see. 25.29. Where's that gap? 24.28. Dang. This looks good. But if I put a stop at 25.30, yeah. It looks really strong. That's the issue I'm having with this. 25.30. And then the target here would be, let's see, 10.42. Yeah, it's not bad. Okay, I got a trade for you here. Buy BBNX at current price levels with a stop loss on a close below 25.30. Target 42 to reduce. Oh, put it on the wrong side. 1 second here. Okay, so let's see where this one takes us. How's that MNMD doing today? Ooh, sharp reversal. We did tighten up our stop some. We're not really down in this position. We are up slightly, but not really doing much for us at the moment. So I gotta get ready to turn over the mic to Blake Young, Mr. 10%. He's going to be jumping on here in about a minute. So we covered a lot of ground today, guys. We kind of recapped the weekly homework that we did over the last couple of days. And I looked at, shared some data with you that showed how just because we had recent strength in stocks over the last few months, especially during seasonally weak periods, doesn't automatically mean that we've pulled forward those returns. We can still see strong ends to the year. When you start getting into like next year, back half of next year, things are looking a little bit messy. It is do or die time for crypto. If Bitcoin does not hold on to support here, we're going to have some problems. So I shared that article with you. That all looks good. We did have a bit of a pop there in crypto. I don't know if there was a headline of some form, but it looks to be fizzling out again already. So we'll see if the bulls can hold on to that. We are in critical support, guys. You lose this, you're probably going to drop quite a bit, and it's going to be a bloodbath. So that being said, I'm going to turn it over here to Blake, who's going to be taking you through the next segment. So stick around. Trinity Trade members, be on the lookout for your Monday newsletter. That's what I got for today. Blake, you ready?
Yes, sir. Let me
All right.
share my screen here.
Stop sharing.
Just didn't want to override your sharing. So,
I'm going to make you the host, and we're good.
all right, cool.
All right, see you, man. Thank you.
Thanks. Appreciate it. And we'll do some crypto today too. Today is Monday, but it's not just any Monday. It's the first Monday of the new month. So we're going to be looking at the long-term view.